Welcome to the complete guide to market structure. In this video, we're breaking down market structure, a key concept in technical analysis. You'll learn about swing highs, lows, trends, BoS, break of structure, and CHoCH, change of character. By the end, you'll be able to spot trend reversals and momentum shifts with confidence. Let's get started. To understand how price moves, we start with swing highs and swing lows. A swing high is where the price pushes up, then pulls back, forming a peak between two lower highs. A swing low is the reverse, a dip in price that sits between two higher lows. These points mark where momentum shifts, showing us when buyers or sellers step in. Take a moment to watch how these turning points appear on the chart. They're the foundation of any market move. An uptrend forms when the market creates higher highs and higher lows. Each new high pushes above the last one, a sign that buyers are in control. The lows also rise, showing that demand is strong and pullbacks are getting shallower. This kind of steady climb is what a healthy bullish trend looks like. Take a look at the screen now, and you'll see how the price steps upward with growing strength. A downtrend is simply the opposite of an uptrend. It's made up of lower highs and lower lows. Each time the price bounces, it falls short of the previous high, showing buyers are losing strength. Meanwhile, the lows keep dropping, confirming that sellers are firmly in control. This pattern signals steady bearish pressure in the market. Follow along on the chart now, and notice how price steps down, almost like a staircase moving lower. Not every market moves up or down. Sometimes, price just moves sideways. This is called a range, where highs and lows stay about the same over time. There are no clear higher highs or lower lows, just consolidation within a zone. Ranges often trap traders who expect a breakout too soon. Take a close look at the chart now. See how price keeps bouncing between support and resistance without breaking out. Trends don't move in straight lines, they move in waves. The strong push in the trend's direction is called an impulse. The smaller pullback that follows is a correction. This impulse correction pattern repeats, forming the natural rhythm of the market. As the chart builds, watch how each phase flows into the next. It's the heartbeat of every trend. Market structure forms because of imbalances between supply and demand. Swing highs often show where sellers enter the market, creating resistance. Swing lows reveal where buyers step in, providing support. These pressure points are what cause price to reverse or pause. Now, watch how these zones are highlighted on the chart. You'll start to see how price reacts around them. Structure alone is powerful, but it becomes even more reliable when supported by other tools. That's where confluence comes in, when multiple signals line up, giving your trades higher probability and better precision. Take a look at this example. The price pulled back to a clear trend line, formed a hammer candle right at the swing low, and then reversed upward. That's structure, trendline support, and a bullish candlestick, all working together. That's the power of confluence. A break of structure, or BoS, occurs when price breaks a key swing point. In an uptrend, it breaks the last higher high. In a downtrend, it breaks the last lower low. BoS is a major clue. It confirms trend continuation or signals a possible reversal. During a downtrend, the market keeps making lower highs and lower lows. But when price breaks above the most recent lower high, buyers take back control. This is called a bullish BoS. It often signals the start of a trend reversal. Watch the chart carefully and you'll see how the structure shifts direction right after this break. In an uptrend, price makes higher highs and higher lows. But when a key higher low breaks, the market structure starts to weaken. This is a bearish break of structure, showing sellers gaining strength. After this, price often begins making lower highs and lower lows. Notice how momentum changes after support breaks. CHoCH stands for change of character. It's one of the earliest signs that price behavior is starting to shift. This usually happens before a break of structure and acts as an early warning. Traders use CHoCH to catch potential reversals or momentum changes ahead of time. Observe the chart on screen. Notice how the character shifts before the major structure break confirms the new trend. CHoCH breaks the internal structure. It gives you an early signal. BoS breaks the external structure. It confirms the trend has truly shifted. You can think of CHoCH as the whisper, and BoS as the shout. Skilled traders look for both to improve timing and accuracy. On the chart, you'll notice how CHoCH often hints at the move that BoS confirms later. Reversals follow a simple sequence. First comes the CHoCH, then the BoS. The CHoCH shows that the current trend is losing strength, while the BoS confirms a new trend has started. This combination at supply or demand zones is one of the most reliable ways to catch early reversals. Now look at the screen. Price first shifts with a CHoCH, then breaks structure with a BoS, forming a lower low and confirming the downtrend. Breaker blocks are areas where price breaks the structure with strong momentum. These zones often trigger trend shifts. Price frequently returns to breaker blocks before moving on. Traders use them as points to re-enter or confirm a trend. Here's an example showing a break of structure emerging from a breaker block. Liquidity is what drives price moves, while structure shows the path it takes. Price often targets liquidity just before a CHoCH or BoS occurs. This stop hunt can trap traders who are on the wrong side. Knowing this helps you avoid getting caught in false moves. Watch how this liquidity grab leads directly into a structural shift. Markets move from sideways ranges into trends in clear phases. It usually starts with a fakeout or a liquidity sweep. Next comes CHoCH forming inside the range. Finally, BoS confirms the new trend direction. Here on the chart, you can see each step in this shift. Many classic price patterns are simply different ways market structure shows up. For example, double tops form when lower highs start to appear. Head and shoulders patterns involve early shifts like CHoCH and confirm with BoS. Flags and channels represent controlled corrections within a trend's rhythm. Understanding these patterns through the lens of structure gives you deeper insight into price action. We will go through the details of these patterns in the next video. For now, let's focus on mastering the core structure. Now let's take a look at some of the most common mistakes traders make, and how you can avoid them. Don't try to label every tiny swing, keep your chart clean. Never ignore the higher timeframe context. Entering before a confirmed CHoCH or BoS is always a risky move. And don't depend on structure alone, always combine it with confluence. Because smart structure reading is all about clarity, not clutter. Here's a quick recap of what we've covered. Market structure is the backbone of price action. Trends form through higher highs and higher lows or lower highs and lower lows. A change of character, CHoCH, signals a possible shift, while a break of structure, BoS, confirms it. Now, for the key takeaways. Always add context, confluence, and multiple timeframes to sharpen your edge. With consistent practice, reading structure will start to feel natural and intuitive. Congratulations, you've leveled up. Now you understand market structure, how trends form, and how to identify key signals like CHoCH and BoS. Keep pushing forward and applying these skills. You're well on your way to becoming an elite trader. Next up, we'll dive into a wide range of key price patterns, including continuation patterns like flags, pennants, wedges, and triangles, as well as reversal patterns such as double tops, head and shoulders, cup and handle, and many others. Once you have got these down, your market perspective will shift. You will spot opportunities others miss and trade with new confidence. Make sure you don't miss the next video, it's essential for your trading journey.